Hey, everybody. So, the question we have for you today is: are we seeing the calm before the storm? Because the markets seem to be going a bit crazy. Our risk index is at a near all time low. So, those two things shouldn't be happening at the same time. So, it's a bit confusing. Lee's going to help us figure it out. Hey, Lee.
Hi.
All right, we're going to look at that. We're going to look at our forecast from last week. Let's do it. Hey, everybody. I'm Kim LaRue, and I would like to tell you a story. A while back, Leah and I were talking about how no one would believe this technology works. So we decided to start this channel and do predictions every week and revisit them every week. And, in case it took us a while to get the videos up, which editing, hardest part of this whole thing. Lee goes to Twitter and posts in real time right after we finish these videos. So you know that those predictions are then at that time. And you know if we are lying or not, which we can prove or not. And we can also prove this technology works. So that's why we do this. So let's go back and look at the forecast from last week, which, we're not always perfect, right, Lee?
We're not, no. And this is one of those times where we were a little ambitious on the euro going up, and we were just a little bit too early with our prediction. Although I want to say we hit the 1.07710 on the nose, pretty much. We said that that would be the bottom, and then it would start to go up from there. Well, picking bottoms, as you know, isn't always easy. So we were wrong on that particular point. And euro it did go up a bit as we said it would, but then it came back down and it's still falling. And then today we've had the ECB and CPI news and it's falling a lot.
So if you're trading and everything like that, this is where we talk about everything that's going on and how you maneuver yourself through all this, right?
Yes. I mean, when you're trading, we provide predictions that are useful for swing trading and they're not always exact. But what's exciting is that we can provide information on a day-to-day basis for traders that is really useful for their in-day trading as well as the swing trade, the big ideas, the big highs, the big lows in the future.
And as I always say, if anyone tells you something's perfect, they're lying. We're not going to be 100% all the time. I haven't said that in a long time because I generally only say it when we're wrong, and we haven't been wrong in so long. You should never expect it to be perfect, but we really do have something that works. So let's look at that forecast from last week.
Kim, if you remember, we made a prediction on the 30th. We said that the euro would be going up from here, possibly to hit towards under this trend line. The next big high would be 1.145. We were exactly correct at the 1.07710, and the price actually didn't do that. it hit this 109 and then came down. Let's show you what it actually did. So as per the previous slide, it did come up, and instead of going further up, it just has been coming down. It's made new lows, especially today because we've had ECB and CPI news, which is an extra interest rate, and the market did not like that at all. And the euro is still falling. It's currently at 1.06346. Now, people might think, oh, well, you got that wrong. But actually, we do have evidence here that, it might even go as low as 1.05 or even as low as 1.495. Those are items that are on the actual long wave prediction. What I wanted to do as well today, Kim, is show you how we assemble those predictions. Let's have a look at the long wave arcs.
So Lee, when you say long wave, this is what we're looking at now. Give a quick explanation as to what we're seeing.
Our hologram is a multidimensional flow interchange analysis that looks at the value exchange between all the currency pairs. What does that mean? It means that there are there's different frequencies that the model is trying to analyze the marketplace. And the higher frequencies, when we say higher, we mean the longer ones like 48 hours, 36 hours, 24 hours. Those frequencies, when they're amalgamated and analyzed, produce what we call the long wave. And the long wave is visualized on screen. Now, it takes a little bit of interpretation, but I'm just going to show you how we do that interpretation. And first of all, what we're looking for is these spiky shapes. There's a set of spiky shapes on one side of price that are fairly numerous in one area and less so on the other side. You can see that here and here. And what we know about long wave is we get this arc process that happens.
All right, so the dumbed down version, lots of spiky things going in one direction means it's going to go that way. And then on the other side, you'll have a big spike or two saying that that change is pretty imminent, and then it'll happen, right?
Right.
Right. Sorry, just had to summarize that a bit for you. All right, back to the forecast and stuff.
When they first start showing up, we see price go away from the condensed spiky lines and then reach a peak and come back. Situations where we see them one side or another is it's kind of go no man's land. When we look and assemble the euro environment, it's really quite simple. We've had a price arc at 1.12, which we made the prediction of 1.288. We were a few pips off, but it came right in there. We also then said it would come down to 1.7710. And unfortunately, it's come a little bit lower than that in the day. It's 1.685. So it's a little bit off. And then we've had this news today, which has just dropped the price down to 1.63 and possibly lower by tomorrow morning. But does it change our overall prediction? No. Our overall prediction is it's going to go back up to 1.145 once this move has finished. And if we think about the triad between the tooling that we have, there's a lot of reason to believe that.
And as a triad you're talking about, that would be Ghost, the MKT Risk Index, and MKT Redline, right?
That's right. So
the triad of our tools.
The triad of our tools. Yes, we've got 3 tools. So if we think about the S&P 500, for example, we've already done numerous videos that talk about the fact that we have our Redline Pro product that is designed to warn of imminent problems in the marketplace. And when it sees that, it spikes. And we had that spike at the end of July going into August, which is this spike up here. And then we had the fall and drop off in the marketplace on the SP 500. But the interesting part is that the risk index, even though it spiked up for that time, has been coming down. And now it's below the magic red line, which is 41. And that coincides very nicely with the S&P 500 going up. And if we look at how the S&P 500 can go up, which is this red line on the left-hand part of the screen, and we take the same parallel shape, we could see this market carry on going up whilst the risk index is still below that magic number. Now, of course, the elegance of the tooling is that should we get a big spike, should the risk index go back up, we know that the direction isn't long anymore, it'll be short. And that's where the triad of tools comes in. And that helps us unify the idea that we're thinking of 1.145 on euro at this moment in time and 1.33 on sterling or cable.
So didn't quite make last week's forecast. So what is the new one for euro US dollar?
Well, as you can see on screen, we can see our arc being built here. And our arc was going on very nicely up until today. And the ECB came in, they added extra interest rates, the market chucked up all over it. And basically, we've got this little move down here, which is not conducive to the concept of a smooth arc where the price then carries on going up. So we now have to think about what's going to happen utilizing our AI software that's built into MKT Ghost. And you can see it in the purple and blue. That is the forecast. It's going to come down and slowly start making its way back up. That is the prediction for the next couple of days. But again, Kim, I'm saying that we're building a big arc here and eventually we're going to get to 1.145. Now, Ghost is currently seeing holograms down here at the 1.0449 level. It's thinking about them, it's seeing them. They may not be realized because they're very low. Okay, they're very, very low indeed. But it's a possibility, and we just have to acknowledge that.
Okay, so we'll keep an eye out for that. And data doesn't care about the news, right? But usually, from what I've seen, is regardless of the news event, it generally comes back around eventually, at least to what Ghost says it's going to do. So that can be a little bit of a good thing to have in your back pocket, I guess. If you go way back to the last time we were wrong, and you do have to go pretty far back, you can see me saying I was really happy about that. And I am again, because this is one of those things where it's real. And if we're going to be right all the time, it's, we're faking it. This is not faking it. This is real. This is the real stuff. So we're going to be wrong sometimes, and we're not going to cry over it. We're just going to keep moving on. If you're trading, you're wrong sometimes. You don't cry over it. You don't get emotional. You don't like start looking at something like the fear index to gauge everything. You really just keep going. And that's what we're going to do, because I hope that this shows you that this is real and that it actually does work. Because literally, go back, do the videos. It's marked as last time we were wrong because we put that in the title because we want people to know when we're wrong. It's been a while. The interesting thing about what we are seeing is that, we have our risk index, right? And this thing is going so low, and our predictions were wrong. And that's because the market is acting erratically. It should not be acting this way with our risk index this low, which is telling us that something is coming.
We could be in the lull before the storm, which could happen at any time. And if that does happen, that would change our predictions in the moment. We absolutely would warn people and restate things. But the MKT risk index is just very, very low at the moment. It's been falling. And that's generally associated with a rise in equities, which is what we are seeing, and also a rise in euro and pound against the dollar. But we're getting a lot of dollar strength at the moment, and that's the confusing bit.
So once you learn to look at these tools and read all the data, you can see things like this. So our extra little prediction today, something's coming. Something's going to happen. We're going to see probably a spike on MKT redline as a warning. We're going to see a jump up on the risk index. It's going to have more volatility coming. This is the beauty of it. You don't know what's coming, but if you know something is coming, you can sort of batten down the hatches and prepare for that.
Well, you don't need to until you actually see it come, because we like to predict, when it's going to happen a few days ahead. But, all I'm saying is it's so low right now, it don't go much lower. The risk index does not go much lower than 30.
All right, everybody, that's it this time. Thank you for watching. We've seen the calm before the storm. We'll see if we're right in the next coming weeks. So check back. See you next time. Oh, and by the way, don't forget to subscribe, like, all that good YouTube stuff. Talk to Lee on Twitter. He's such a nice guy. All right. Thanks, everybody. Bye-bye. As the markets are a bit crazy, our risk index is at a near all-time. Did your camera go out?
Computer's restarted itself.